Welcome to day 9 of the 9-day bootcamp, our last day, and this is examples. So, you can notice I am on the CFD, US 100 CFD. That's okay. The rules generally still apply, almost all the same, and they are completely the same. Nothing changes whatsoever. So, we can notice that all of this sell side here, we do not trade before 9 a.m. These are our last notes. Just to wrap things up, we do not trade before markets open, only trade in session. Only trade in either New York or London session, whether that be specifically London and New York. So, that being said, although there was an A+ setup, we do not take it. Not quite there yet. Did not tap us in anyway, but we start looking for shorts right here, or longs or whatever. 9:30. This marks market open. Vertical line, market open. 9:30. So, 9:30 opens, and we have 10 a.m. marked out, everything. You will notice all of this liquidity. All of this liquidity is swept, so we are looking for shorts. And to go in the 1 minute time frame, we don't have a market structure shift quite there. You will notice a 4-hour bearish fair value gap that was not closed above at the time of 10 a.m. the new 4-hour candle, as we can see here. So it is not yet inversed. We are not looking for longs out of it because it was not inversed. Simply shorts are what we are looking for, and therefore we start looking after this liquidity sweep. And look for it. And if you look closely, no market structure shift. No market structure shift, even if there was right here. Barely, and no fair value gap, no entry. No market structure shift, and none again. You could see that there was no shift. There was, you could say, a shift here, sure. No fair value gap, no entry. No shift again. If you look very closely, you guys can pause the video and go through these individually. So, and then no shift, candle closure, did not get it. This is just, it's, you can even turn on the lines to help you, but it's not that good because it doesn't accurately portray it. It's good for starters to understand your theory. Excuse me. So, we don't quite have a market structure shift anywhere. Again, no fair value, even when there is a small one. Anyway, here, market structure shift. Did you catch this? Right. Lower low, lower high, higher high, higher low, lower high, and then crashed right here. No entry still, no fair value gap. So, this, you could see, created a high, higher high, and then closed below this line, making this a market structure shift after this immense liquidity sweep. Okay? That being said, we're now looking for entries. And you can see that there is no entries anywhere, which is completely fine. And at this point, remember that if there is no fair value gap either before the market structure shift or on the candle that created the market structure shift, we are not entering. That is a continuation entry, and we are not trading continuation entries. They simply don't yield the best risk to reward because they are a little bit later into the range. Although they work out, for example, this fair value gap would have worked out, but not only is the stop big, which is still okay, but it is not as good of an entry as if we had something like this, where our risk to reward and everything is much smaller, much more fine-tuned, and this is the model. No fair value gap, no entry. Eventually, you notice this. You know what? Let's move over to NQ because it's going to be slightly different. February 11th at 11. Oh, I didn't realize how low it was. Okay. So, back to where we just were. Market structure shift, no entry. This right here is a fair value gap. So, okay, market structure shift, close below that. Okay, structure shift, after the liquidity sweep, it's valid, and you get a fair value gap right here. So, it's very small, let me just adjust it, it's there. It's there though. Entry, short, stops unfortunately at the swing high, which in this case we would look for a better entry because it is too high into the range. Noticing that 0.5 level never got tagged in. That's okay. Why? Because we see that's completely okay because we see another liquidity sweep right here, small liquidity sweep, still okay, and now a market structure shift again. Market structure shift, not on this candle, but on the next candle, and it created a fair value gap, and there are entries here. And stops not at this immediate swing high, but we want that complete swing. For example, if this trade had come to the 0.5, we want it at the swing high because this ensures that our trade is going to have the best possible way of making a move. Target a 1 to 2, and there you have it. Funny enough, it also came down to the 10 a.m. range, which is completely fine. If you want to take these to these lows, you can. This is called a silver bullet. You'll see this kind of price action during 10 a.m. So that was an example. Moving on, we have this asset class is also related to S&T divergence. So for example, it's a little more complicated. You guys can look that up. It's not that complicated, really. Nothing's ever actually that complicated. Like for example, I'll leave you guys with a video. in the future on SMT. For now, let's not focus on that. But who knows what an SMT is, guys? Because there was one right here. We'll get into that in a bit. SMT, basically, NASDAQ, where is it? Holy. The S&P took out this high. Oh. How do I path? S&P took out this high and then came down. Right. NASDAQ did not. This means that there is a tendency to go down. Makes sense. They are related. One took the high, one did not. They are going to go down. They are related. If one is down, one took it. That is equally, if there was an SMT here, that means that ES or NASDAQ took the low and went down. This would be an SMT with this, right? Or if ES took it, there's an SMT there. Let's pretend this is ES. ES is in red. Okay? Cool. It means that there's a tendency to go down or move in the direction of that SMT. Later on, we notice that, oh, there is so much stuff. Oh, okay. So within this day, let's get rid of these SMT lines. Within the day, you'll notice that this fair value gap got tapped into. Losing my voice. This is quite the marathon for me. And here we go. Completely swept this 1 hour. You will notice it closed above it and then came, swept it, and market structure shifts. Market structure shifts. No return to fair value gap. Unfortunately, it ran without us. Not a problem. Because this, let's get rid of this, is another liquidity sweep and tapped into this 1 hour gap again, swept it again. So what do? Obviously, if you are looking for some kind of shorts out of there, it's probably not the best idea. So also, this 1 hour got inversed right here. You guys can see that. Close above, meaning we're looking for longs in this range as well as now in this range. So go in. We notice that there are no long setups that come in, literally none. No market structure shift, and then a move down, strong move down. Market structure shift, never tapped in. Target a 1 to 2. Another sweep into this hourly fair value gap. And then we have what would be here an entry right there. Did not tap us in, but another liquidity sweep happened in that. Another liquidity sweep happened in that 1 hour. Market structure shift happened right here. Market structure shifts, and look what we get. Fair value gap. No need for a better entry. we check. Better entry, check. Let's see, check. Okay. Entry at the midpoint of fair value gap, check. Stop at the swing low, check. And break even when the candle closure above the swing that tapped into fair value gap, check. So this would be our break-even point. Break even, and it ran 1 to 2. Cool. Again, we did not close above this gap, tapped into it, had an SMT right here. There was an SMT. Again, what do we say about SMTs? ES took this high. That will push this price down. We're looking for sells simply right here after this market structure shift and this shorts right on, this fair value gap, entry, short. Stop at the swing high with the SMT, target a 1 to 2. There we go. That has been an educational series. Funny enough, we come back in, look for a market structure shift. Never happened. Never happened. Happened here actually. Could have been an entry. Let's say we did. It's completely okay. This is a great example. Finally a loss. so I could show you. It goes something like this. Right, sorry, market structure shift right here. And we could see right there our fair value gap. Entry stops at this swing high. Completely okay. It got wicked out. That is completely okay. Now we can look for entries again. Since it swept liquidity, we can look for entries again. Sorry, I was supposed to label this. Look for our entries one more time. A market structure shift, fair value gap. It's not a bad stop loss at all. Targeting a 1 to 2. Right after, we had a win. You will see this in FX Alex G. He teaches this. A sweep, a sharp liquidity sweep. While I was documenting my entire journey with him on the $1 to a million series, every trade of every day for 3 months, for 90 days, I came across one trade, I think it was USD CAD, that at the time had wicked, and because of that he actually got a break and retest on a local point, so something like this on an entry, and he entered as a confluence, and that was a confluence for him to enter as well, because the market does do that. It wicks out the losses and then it comes back down. That is completely okay. So sweep, check. Market structure shifts, which occurs strictly after a sweep, or else it is not a market structure shift. Check. Return to fair value gap. Check. Sorry. Fair value. Sorry about that. Fair value gap. Check. And now better entry. No need for better entry. Check. Stop loss at swing high. Check. Target 1 to 2. Check. And break even at passing the swing that touched the fair value gap. check. There you go. Pretty intuitive, right? Something nice. There you go. Still hit. The reason I don't target lows, if any of you guys were wondering why targeting lows, you will see some traders target lows. They don't get hit. If I were to target this low right here, it would not get hit. If I were to target, I don't know, this high, I would have to, let's say, wait for this to edge it, calm down, hit my break even, fuck around, right? Sorry for my language, it's supposed to be a professional environment. But like, targeting highs is like, for example, if you're to target this high, you got lucky, okay, cool. This high hit fucking days later, right? And if you have this high was your target from this SMR down here, let's say, and it tagged in perfectly, you're targeting this high. Look how nice of a trade this is. Unless you're taking partials throughout the way and then you're just stalling and you're coping with a strategy that half works, right? If you have a small market structure shift, sweep, don't forget the sweeps, obviously cool. Alright, swap this liquidity right here, actually I'll just keep it there. Then you have your entry, this fair value gap, right? And then you take it to this swing high. Well, first of all, right? If you're partially along the way, you're about to be set at a 1R, but like let's say for me, like you're targeting this, it just doesn't get hit. Well, why would I do that? I'll just have a consistent target. Sure, the 1 and 2 might not get hit, but in trades that go extremely deep, for example, let's say I'm targeting this low, like just like let's say my swing was like this, like just some incredible, and this sometimes does happen, like, right, your 1 or 2 will just, let's say, or whatever trade, right, you wanna get like a little like one cheeky 1 to 3 and you're targeting this low, well, you're gonna be waiting another 4 or 5 hours. You know, we're day trading, we're not supposed to just be sat on the charts, right? We're not to take partials, not to sit on charts twiddling our fingers. Okay, ladies and gentlemen, we are not to be twiddling our fingers. We are on the charts for around 2 hours a day. 2 to 3 hours a day. We get sometimes a market open, SMR, and most, if not every day, we'll get a 10 a.m. silver bullet SMR, which is what this looks like. 10 a.m. open high, low close kind of thing. It's PO3 stuff. It's not as important, but it's still good to know, and I still use it. So here's our checklist. You can use it for you guys. You guys can put this in your journal and have a checklist there, maybe. I'm not too sure. And now we know, like, to not target lows, we just target the fixed 1 to 2. And if you're unprofessional enough to just have runners and just walk away from the screen, like that's like you're entitled to that money. I don't get that. Then this is okay. This is your trade, right? And that's whatever your style. It's just, right. What we want is consistency and a stable system slash strategy. Not a strategy that, oh, might just partial here, might not, might go to this low, might not. You're just sat there like on edge, basically, for no reason. There's no reason for that. If you simply just cap your wins at 1 to 2.5, 1 to 2, with an 80 win rate, what more do you want? You can go from $1 to $1 million in 8 trades, and that's a 1%. That's a 20% chance. So think about that for a second. Sorry, $100 to $1 million. This is I've ran this, and I'm not afraid of this. get used to this. Like, look at this. In 8 trades with the 0.85 to the n times, you have a 20%, a 19% chance of hitting it, a 19.82% chance or whatever of hitting this. 8 to 9 trades in a row if you risk your $100 and you keep risking the $100 over and over and over. And mind you, my best day, which was my first ever video I had posted, was almost 6-7 wins in a row. Like, that was like a day that actually happened. Look at this, like, okay, 3 wins in a row, a loss, a win in a row. Like, you can really, that's like saying your 20% chance to hit the lottery. And that's the power with this strategy. I don't obviously this isn't something to boast about or to measure your metrics about at any point, but to just know that this system is consistent. There's no partials. We're not twiddling our fingers. You have consistency. It's a stable system. And what more could you really want? There's no partials. The only thing that there is break even. And even then I was super hesitant on putting a break even. It should have only been stop loss or take profit. That's how concrete a system should be. Like a system where you have a break-even point changes. Your break-even point for this trade is different than this trade, which is different than this trade, right? Which may be higher than this trade, may be lower than this trade. That inconsistency should not be part of a model at any level, because we are looking for the most reliable and consistent model, right? So that being said, thank you for watching the day 9 of the bootcamp. I know I got into a little bit of a rant there, but I think it was a great way to end the bootcamp. That was it, man. You made it. Day 9. Examples: 1 strategy, 1 asset class, 1 take profit, liquidity sweep, market structure shift, return to fair value gap. This has been B-Shell Adapted SMR from ICT 2022, and I thank you so much for my first ever complete bootcamp, and probably my last, depending on anything, because there simply is none left to teach other than SMT, which I spoke about already. But you may also find, let me see, just, it's okay. You may also find maybe in some future um, PDFs or something you may read. I explained it pretty much well if you guys want to look back in it, but that's been the end of this bootcamp. That is the last thing I would have taught. If I could have made this a 10-day bootcamp, but I strictly made it 9 days. I tried to squeeze it in, and I'm sorry, but it was a very small portion, and I hope that I have covered 100% of the model and 100% of a functioning and beautifully working ICT model. And personally, my favorite, as well as the people I trade with, their favorite. So thank you guys for watching, and Discord is in the description. Make sure to subscribe, like, if this series helped you at all. Thank you so much, guys. Thank you for watching.